Good morning, Mary. Good morning, Ali. Morning, Peter. Good morning, Son. Good morning, everyone. All right, we're gonna get going in just a little bit. Enjoy the music this evening, morning, whatever part of the world you're coming in from. I restarted my computer, so I just need to get that all going in just a minute. Hello, Nikki. Alright, we'll get started in just a second. I restarted my computer, so I need to get that all fixed up. One more minute. I'm going to pull your questions up onto my other screen. Good morning, Shirley. Good morning, everyone. I think it's a good time to mute the music. Hold on. All right. Good morning, everyone. Good evening, whatever part of the world that you are coming in from. I've got, lots of good information to share with you. All of you today. So hopefully, people start streaming in. Has everyone had a good trading week? If it's been good, give me a thumbs up. If it's been bad, give me a thumbs down. If it's been neutral, you could just say neutral or just a line. That's fine, like a horizontal line. That's fine as well. I'm glad to hear it was a great trading week for you. Anyone else? I know some of you are still paper trading, and that's perfectly fine. Good, Shirley. I'm glad to hear that it was good. Peter's neutral. That's fine. Tough week thing. Okay. But for most of you, it seems like it's been, a fairly decent week. And no trade is good too. There's nothing wrong with skipping out on trading if you don't see any opportunities. And that may be the case next week, my friends. Next week, before we get into it, maybe one of those weeks where you either stand down, you're super careful. The only real opportunity next week is going to be Monday, Tuesday, maybe half of Wednesday, and Wednesday could be messy. But it is, as many of you know, Thanksgiving in the U.S., so U.S. markets are closed on Thursday. Now, FX market keeps going, and I'll trade on Friday, and some of the other markets trade on Friday, but pretty much everyone's gone. And when everyone's gone, the moves usually don't have much momentum. They're usually fake moves. I would take the back of the week completely off. I would maybe even consider like once you see once you see the Wednesday data, where there's actually a lot of data on Tuesday and Wednesday from the US, get a little bit of momentum, and then that's it. So pretty much Monday, Tuesday, and a bit of Wednesday should be the only days that you're trading in this and next week. And Monday, if you join my live stream, Tuesday we've got retail sales. Wednesday we've got jobless claims. Tuesday we've got retail sales and inflation. Wednesday we've got jobless claims, a whole bunch of other stuff. So Wednesday, don't trade. Tuesday and Wednesday, if you're trading and if you're looking for setups, I would wait till after the data or close your positions before the 8:30 data and then get back in after the data. So there's so much going on next week. So the point I'm making for those of you just streaming in is that many of you had a good trading week. Some of you didn't trade. And sometimes it's important to know, I say this a lot, when to trade and when not to trade. And next week, because it's a holiday, there's a lot of times you got to be very, very careful. So yes, definitely be careful. I'm glad, Ken, you qualified 2 Apex Blue 1. That's okay. They've got to have a huge sale, get another few in your bucket and keep plowing away. There's a lot of data coming out this week, Tao, but I don't think they're going to release the inflation data, but we'll see what else they have. They're trying to tell us what's coming out, and I'll certainly tell you what's coming out. But I just wanted to share that with you because next week or this upcoming week is very different from a normal trading week, and that's very, very important to know, to remember. Also, yes, you should have an opportunity to qualify more on the back of the news. Tuesday after the 8:30 data, I think it's going to be a lot of opportunity, a lot of moves. It's retail sales. I mean, retail sales is a big deal. Yes, there's going to be good opportunity. And then there could be some good opportunity after the news on Wednesday too. But once lunchtime comes around in New York time on Wednesday, I think people are going to go home early. They're going to be done. They're going to close up their books. So be very careful is all I'm trying to say. And we'll talk about it more on Monday. The other thing I want to mention, I'm a little sad about this, is that this is my last live class with you. Boris is going to be teaching the next 2 classes. I will still be doing the Friday reviews. And, when his classes come, we can review, what you've traded with him. But he's going to teach you BFF in the next class, which is his strategy, which is very, very exciting and very, very effective. You've seen the cold trade BFF. It's very, very good. And a lot of you have been asking about position sizing and, how to, what account size to start and, EAs and all that stuff. Boris is going to teach you all of that. So he's going to bring his insight to the next 2 classes. And I think you'll really enjoy his short-term and swing trading strategies. So he's very much into trading NASDAQ and gold. Okay. I use the technique that I learned that straddles the news releases with 2 evals. One gets passed and one usually blows. Apex is the only one that'll let you do that. And yes, that does happen. And I know that Boris, he doesn't straddle, but maybe he does. I don't know. But he will definitely, be teaching you how to pass your evals very, very quickly. You won't miss me for long, Shirley. You'll still see me on Friday classes. And then in January, we will begin our 3-month coaching classes. So you'll see a lot of me. I'll ask him about the slides, but you'll see a lot of me. And, but there's a lot that I think you'll find valuable in what he does. And so I definitely want to, it's total edge, right? And not just Kathy's edge. And I want him to come on and share his expertise with you as well. All right, so let's get into it. As you know, this is our stream class. So questions I'm going to mostly keep to the end Let me just get myself organized. But feel free to type them up as we go. I just need to be able to see. Okay, let me move this up. Yeah, he's got a great strategy. January, so as a part of the Total Edge, you get to participate in the revamped VIP coaching sessions from me, which will begin, I thought maybe we'll begin after this class, but I think it's better that we begin in January, because there's going to be, 2 weeks, I think at least probably 2 weeks of no streams at the end of the year, the last 2 weeks of December. Yeah, maybe there'll be streams like Monday, Tuesday. But anyway, I don't want you to miss out. I want to start fresh on January, first week of January. We're going to start fresh. And yes, that's all what we agreed on. That's what's going to happen. So you'll still see me for the Friday sessions up until I think the 5th or the 12th, I have to see. But after that, we all take a break and we close up the year and then we start again. And yes, Forex does have a nice strategy that I think, will get everyone will be very, very happy with. All right, let's get to these slides. Let me share my screen, share screen. Wonderful. Okay. I just got you one more thing. Sorry, my PowerPoint does not always. Where in the world is my PowerPoint? Hold on. Sorry, everything seems to be just all over the place for me. I actually, as I said, I had to restart my computer and get everything going. Let me reopen my PowerPoint slides. Sorry, my friends. I think, are you seeing me? I think I might have to restart my computer. Give me 1 second. I don't know what this computer is doing. If you bear with me, I gotta see if I can do these slides. Yeah, I know you don't see any slides. Give me 1 second because I don't want to end the stream. So I'm going to pull it up on my other computer. I'm going to come in on my other computer, and then I'm going to reboot my main computer. I apologize for the delay, but I have to do this. Okay. Just give me 1 more second. All right, so let me reboot. Okay, so sorry, it's gonna stop. I'm just restarting my computer, so just bear with me. Let me know you can still see me. But while you're waiting for me to restart my computer, let me know if you have any questions, anything you want to ask. I apologize, technical difficulties this morning. Hopefully my computer will start pretty quickly. Yeah, it's because I tuned into the other computer. But we could probably do it on this computer as well, but I think it should just take a minute. Any questions? What strategies are you guys liking the most? I want you to all continue to practice. If you like the strategy, the 821, it's really been working out really, really well this week, throughout this week. And we can look at it at the end. All right, my computer restarted. Let me see if I can pull up my PowerPoint slides again. Sometimes my computer, it just gets so overstretched. Let's see. Yeah, everything is spiffy this morning. All right. I'm going to pull StreamYard back on this, and I'm going to put the music on. I'm going to mute myself. Okay. Okay, I'm back. All right, so everything should be good now. If you can hear me, everything is good. Let me know. Give me a thumbs up. Turn off. All right, I think everything is good. If you can hear me, see me, give me a thumbs up. Let me know that everything is working. Give me a thumbs up. Is it working? Let me know if it's working. Can you hear me? Say yes, please. Okay, fantastic. So everything, okay, we're good to go. All right. I signed up to Think Capital Lightning Plan. I was wondering what strategies you can give me to pass the 5,000 target. Boris actually trades. So you can do the 821 strategy. Boris also trades the Think Capital account. During the Asia session. So he's going to share. You can ask him that on the stream on Monday. Is gold sentiment shifting? Williams talked about lowering interest rates. I think it's all going to depend on the data this week. Everyone's watching the data, and I think that's really what is going to keep decide whether or not we get a continued move, continued resumption of the rally in gold, or a reversal. I think that gold could correct a little bit more, but I think the uptrend is still very much intact. Okay, let's get started, my friends, since we are now good to go. All right. So, and this is lesson 8 of our Total Edge Masterclass, Fundamentals Mastery. But we are now going to get into talking about some other things that I think are fairly important to you that have come up in our review sessions or come up in our one-on-one sessions. So make sure that you join in, participate in those, and that's basically trade management, entry and exits. We're going to talk about specific Forex trading tips. So in this session, we're going to spend a lot of time going through some of the unique characteristics of each of the major currencies, and then the trading traps to avoid and how to set up your day for trading success, I guess is the best way to talk about it. And I felt like this was very important to share with you, which is that, many of you are learning to trade for the very first time. And we talk a lot about, the trading strategy, how to get in, but we don't really spend too much time talking about risk and reward. And we don't really spend too much time talking about the type of mentality that you should have. So, I have worked with, thousands of traders, traders who are, on the retail level doing exactly what you're doing. I've worked with hedge funds. I've worked with professional traders. I've worked with, people who've been in the market for a very, very long time. And I want to share with you kind of the secret in many ways to the success of a lot of the people that I have spoken to, along with my own success, which is that many of you are, you come into trading and you are taught that the best way to trade is to look for, 2x, 3x, 4x, 5x trades. And yes, that is in many ways, the way that many people succeed. But in my experience, I feel obligated to share with you this is that many successful traders, they may not tell you that while they look for 2x, 3x, 4x, 5x, oftentimes they'll close their trade at 1x, which means 1-to-1 risk reward. Because when it comes to trading, there are more than one way to win. The people who have, for example, 4x, 5x, which means 4-to-1 risk reward, or 5-to-1 risk reward, or even 3-to-1 risk reward, they're trading what we call high profit. And what high profit means is that in real life trading, is that you have a losing trade, a losing trade, a losing trade followed by one winner, which may be big, and you're feeling good, and then you have another loser, and you have another loser. And by that, what is it? Oh, seventh trade, you're thinking, oh, I better win again, or I don't know, what it is. And then you finally get your winner and then maybe winner. And this is the way that, a lot of people who claim that they have 4x, 5x trade. And sometimes this may be much worse. Sometimes it might be loser, 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 winner, loser, 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 winner, which, in theory sounds great, but mentally can be very frustrating, particularly for you, those of you that are new, where you're trying to learn the confidence of trading, where you're trying to learn the confidence of the strategy that you're experimenting with. Having loser, 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 maybe loser before the winner, meaning 4 losers before the winner. By the time you get to the 4th loser, you're opening up the 5th trade. Psychologically, it may feel like it won't happen for you. And that's where people end up doing things like strategy hopping, where they end up moving from what could be an effective strategy to basically bailing at the worst time to another ineffective strategy. So there is more than one way to succeed in trading. And that other way is what we call high accuracy, high probability. That means having winner, 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 one loser, winner, loser, winner, loser, then winner, winner. So I don't have more trades on this, but it's basically having positive reinforcement as you go along the way with having it's really hard for me to really get this to seep into your brain, but I feel like it's so important. If you imagine yourself sitting in your seat and you're trading and you're having a small winner, a small winner, a small winner, a small loser, small winner, small loser, small winner, small loser, small winner, small loser, you are feeling much more confident and less stressed out, and more willing to keep going than if you have loser, 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 a big winner, but then you have loser, loser, maybe you have another big winner, but then it could be loser, 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 winner, loser, 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 winner. And so psychologically, emotions, psychology is so important when it comes to trading. And so many of you come to me asking me how you can manage the psychological aspect of it. And in many ways, the way to manage it, I feel, the psychological aspect of it is, I believe, to focus on high accuracy, high probability trades where you're winning 70, 80% of the time, but your winners and losers may be about the same, and maybe one winner will go big, but most of them are about the same, than having like 5 or 6 series of losing trades before you make the big one, because maybe your account couldn't have survived the 5 losing trades, or maybe you psychologically start to really question the strategy before you get to the winner. And so this is so important, and that's why there is a term for this. There's a term for this called the base hits. Base hits are basically, keep going, swinging at those bases, and, just getting those base hits, and eventually, making to a home run, as these base hits add up. So there is an official term for this. And if you, for those of you that watch YouTube videos, if you watch enough of them, you will hear a lot of these, good traders talk about how base hits is what is helping them win. But I want to ask you, come think about it yourself, and you can answer this in the chat if you want. Would you prefer loser, 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 and a big winner, followed by loser, 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 and a big winner? Do you feel like psychologically that's something that you would prefer versus, small winner, 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 loser, winner, loser, winner, loser, winner, loser? Psychologically, think about what you feel would be more palatable for you. And that's really a very, very important point for me, because base hits are very, very valuable. Boris talks about this every single day. It's like, he's like, I don't know how he describes it. It's gonna be the worst analogy possible that I give, but he's like, we're basically pigeons where we just peck, 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 peck at the market, and it all adds up, versus trying to swing for the fences. And this is why, I had a one-to-one with one of our students. He asked me, when your strategy is, or your trade goes wrong, how do you keep going? It's because I know that I'm going at these little trades continuously, and it adds up. Yes, this is the week to week performance of my strategy. And yes, there are little reds along the way, but the base hits, the 20, 30 point base hits that I keep collecting every single trade adds up. And so even when I have those losing weeks where I may have a losing week, and within those losing weeks, there may be some, very frustrating sessions, I can keep going because I am focused on those base hits. That's 100 points a week. That's my target. When we have those 68 points, we have those 46 points, that means that there were probably some losers along the way, but it adds up. So the reason why I feel so confident in what I do in my strategy is because I trade this way. I trade high accuracy, high probability, because for me and for my traders, and for me teaching you the strategies, it's so much better, I feel, for you to have continuous positive reinforcement than if I pulled up a chart and said, look, Ali, here are, yes, 5 losing trades, but we finally cashed this one big one. But what happens if that one big one is the time that you're at work, or you're on vacation, or you're sick, or you've got to do something else, and that's the day you miss the trade? That, I feel, is the worst thing ever. I want experience for all of you where you have the consistency of, winner, 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 winner. And then maybe in your play account, a smaller account, you go for the big swing trades. So that has been the key to my success, and the key to the success of a lot of traders that I have worked with. Now, as I said, there's more than one way to win. There's plenty of people who just wait for those base hits. But I'm going to give you a little bit of a tease. I'm interviewing, and I'm not saying that this is, that he's a bad trader in no way, shape, or form, but I'm interviewing Zamco, who's a very famous prop trader. He's pulled out $1 million from various prop firms in 2 years. And I'm going to talk to him. I'm not going to assume things that are going to happen, but I know that he trades gold, and I know he's traded gold for the past 2 years, and I know that he basically goes long gold. And let me ask you, what's been happening in the gold for the last 2 years? It's been a one-way uptrend. So in those environments, I fear that when the market turns, it's no longer up, and it's up, down, and maybe even down. How are those strategies going to work? But when you have a solid base hit strategy that like maybe the 821 that can go long and short and work both ways, and you're not just basically waiting to go long in trends that cannot last forever, that's what you want. You want a strategy that works in up markets, in down markets, across all markets. And in many ways, focusing on the base hits is what I feel is what will generate you income from trading. And that's also something that is important, is because if you're thinking about making income from trading, you need consistency. Your income, your livelihood, you're paying your mortgage cannot subsist on the big wins. It cannot subsist on swinging for the fences and waiting for that big win. If you need to pay bills, if you need to make your mortgage, if you need to pay for your kids' tuition, you need the consistency of income. And that consistency of income, in my opinion, should come from these small, consistent base hits versus swinging for the fences. Swinging for the fences should, in my opinion, be a side account. That is not the one that you really need to draw your income from. Because if we think about what we really want from trading, which is that we want, a consistent income stream and maybe a way for us to become full-time traders, then you have to think about, how much do I need to make every single month? Do I need to make $2,000, $3,000, $10,000 a month? And how do I do that consistently every single month, instead of waiting to make, like some of these prop traders, $50,000 in one month and then nothing in the other months? I mean, that's not realistic. We really, and this is where thinking about it, not in the fantasy way, and thinking about it in the realistic way is so important. So I believe that this is the fantasy, which is great if we can get those winners, and we get those big winners maybe once or twice a month, that we catch that really good trade. But can our income, can our livelihood really rely on that? I don't think so. I think that our livelihood should rely on the consistent, if you think about it, 100 points a week in Forex, one standard lot is $10. If you trade 2 standard lots, 3 standard lots, that's maybe, $2,000 a week. $2,000 a week, you focus on that $2,000 every single week, $8,000 a month. Obviously, you're not going to make money every single week. So let's say $6,000 a month, and just focus on that target versus, trying to go for the big winners. So I know that I'm talking about this philosophically, but I feel like it's such an important point that I really, I want you to watch this again. I really hope that this kind of sets in, because as we're trying to frame everything that I'm teaching you into how you can become a consistently profitable trader week to week, I think it's very important to think about, what does that really mean? That means pulling income from it week to week, month to month, and being able to rely on it. Because, we want to get to the point where this is our full-time job, and we can actually rely on the money, rely on the strategy. And I personally, and I know there'll be plenty of people that disagree with me, I personally believe that reliance comes from consistency and not waiting for the one big trade. So I really hope you take that to heart, because that is more important than anything else I think I've taught you, which is in one of the classes, I talked about having a goal. And I talk about having a goal a lot. And a lot of people, they listen to it, they don't really absorb it. But that has really transformed my trading. And your goal should be, how much do I want to make every single week for it to be satisfactory for me? And obviously, we have to have different levels of satisfaction in the beginning versus the end. In the beginning, as I'm learning, $200 a week, $500 a week. I'm just going to focus on this. I'm just going to target this, and I'm just going to try to achieve it. And then as that happens, you make that 1,000 a week, you make that 2,000 a week, and you grow from there. And when you have a target, that target and being able to consistently meet that target is what is going to give you the confidence to become, to do less work, or become, or leave your job completely and become a full-time trader. So having a target, having a goal, I think is very important. And a part of that is basically understanding how is achieved, which is not, in my opinion, through the swinging for the fence trades. It's through the base hits. If that resonates with you, give me a thumbs up, and that you're kind of understanding what I'm trying to express to you. Give me a thumbs up if that resonates with you. All right. So now, we spent a lot of time talking about how to enter a trade. And we talked about the strategies to use, the techniques to use, the combination of fundamentals and technicals. And we also talk about where to put our stop, using the moving average, the swing low, swing high. But once you're in profit, how do you manage your stop? Because if you're in a loss, right, you close your trade when it hits your stop. Or you do one of two things, with the trade. And if the trade is going poorly against you, you either, stick with your stop that we talked about, or you exit when the setup changes. So for example, if I am, I have a long zip signal, and I've got my white candle, green background, and it's bullish, and it tells me to go long. If it actually flips the other way and turns red and turns south, that means that my setup is no longer valid. So I should be out. If you're trading the 821, for example, and let's imagine that that it's both of the lines are crossing down, and you've got a downward cross. The price is below both of the moving averages. Then suddenly, whatever happens, it spikes the other way, and now it's like a huge up candle that's completely broken above both of the moving averages. First off, your stop probably should have been around that level, which is where the 21 EMA is. But pretty much when it's above on the other side of the moving average, you're probably wrong. So the two ways to exit a losing trade is either when you get stopped out, or the setup changes. Like the original setup that you were in is no longer holding. But sometimes you may be in profit. So if you're in profit, how do you exit that trade? How do you exit that trade if you are in profit? Well, there are a variety of different ways. And this is my secret sauce. This is how, you can get partial. You can kind of combine both the base hit strategy and the swing for the fences strategy, where I basically have a target 1 and a target 2. My target 1 is usually something that is easily achievable. So it's something that, 20 pips, 30 pips, something that is easy to achieve. And I think, will happen, pretty easily. So when we trade gold, when we talk about maybe 7 to 15 points is like an easy to achieve level. Once that happens, what you can do is you can close half of your position, bank those profits, then move your stop to break even, which is your original entry. So let's take a moment to appreciate, what does that mean? That means that I've locked in profits on half of my position. If the second half continues to move in my favor, great. I'm going to continue trailing my stop by my 8 EMA, for example, and I'll continue to try to lock it in, or by my 21 EMA, or by my 15 EMA, however aggressive that I want to be, whatever breathing room I want to give it. If it continues to move in my favor, wonderful. I will trail my stop. But if it stops me out at break even on my second half of the position, no big deal. Because if it stops me out on my second half of the position, that means that the second half of the position is closed for 0 loss, because it stopped me out at my entry price. And so on the full position, I've made money on the first half, and then I got stopped out at 0 loss or profit on the second half. So my overall trade still made money. And that's how you can combine the base hit and the swing for the fences. Now, I do have to say, in this scenario, you have a double position. so that when you are stopped out, you will lose, more than if you have one position. But if you focus on a strategy that you believe in that has, 70, 80% accuracy, then in that case, it's okay. I mean, that's my experience, that it's fine. Other ways to trail your stop include, the 8 EMA, the 15 EMA, the 21 EMA, the ones that we trigger off our trades are really, really great things to use to trail your stop. You can also use the 2-bar high and low, which we did talk about in one of our previous classes. I think it's the one on the trading strategies, which I believe it's class number 6. So you can go back and review that. That is also pretty good, but that keeps you in the trade shorter than moving averages. But that's also a really good way to trail your stop, to keep a very tight noose on your stop so you don't give up much of the profit. Other people may prefer just an equity amount, $50. I'm happy with $50, or 3 points, 5 points, whatever it is. Let's keep it easy. My broker allows me to do an equity-based stop. I'm just going to put it in. I'm going to forget about it, and I'm just going to move on with my life. It is the easiest stop. It is the one that, you can just put into your brokerage platform. It'll do it for you automatically, and then you don't need to worry about it. So but that's, obviously customized to you and not based upon the structure of the trade, which is fine too. That is fine. Making your life easier is very, very valid. And then there's the ATR stop, the volatility stop, which is a kind of combination of equity stop. So the ATR tells you what the average true range is for the instrument. And then you can just put that in and also just, trail that as a volatility stop, which may be a little hard for some of you, but that works as well. But when you are in profit, these are the different types of methods you can use to trail your stop. And always have maybe the pie in the sky hard target, just in case. Maybe 3x is, I think, in my opinion, satisfactory. Maybe have a 3 times your risk reward target in there, just in case you go to sleep. Something happens and you want to make sure you participated in it, especially if you're going to sleep. So that's really what I feel very, very important things to share with you. And it's not a strategy. It's not, specific tips that you'll learn in Forex later on, but in many ways, it is more important than all of that, which is to the psychological part of it, and the tactical part. In order to make you confident as a trader and to truly help you build this as an income stream, which is to define that amount for you. Start off modest, $100, $500 a week. Try to achieve that and then keep going. And then you can always just focus on the $500 and use the copy services to, do more, which a lot of people do. And, we can always talk about that in one of our review sessions. Board session can talk a lot about that. You can do that, or you can just grow the amount. But I feel like having a weekly target is very, very helpful. So now we're going to shift gears. We're going to talk about the Forex trading tips for those of you that trade Forex. And at the end, just to give you guys for those of you that don't want to stay for this, if you're not interested in trading Forex, you can watch it on demand. At the end, we're just going to talk about how to set up your trading day and review the steps that you should be taking, which won't be new to you, but I think it's a really good review. And then we'll talk about the 9 things that you should never do when it comes to trading. So you can either stay for the Forex stuff and just absorb some of these things, or you can just watch it later on and skip to the end. So the first one is the US dollar. The first tip that I have for you for the US dollar is the most important tip, which is the dollar takes its cue from the bond market. So if you're trading Forex, it is absolutely essential for you to be following treasury yields. This chart here is the dollar index and the treasury yields chart. And it shows you the positive correlation between the US dollar and the treasury yields. And it is very, very important because, when I'm trading Forex, I am, once again, it's like, I feel like so frustrated that I can't put my, stress the importance of these things to you. I can't shake you and say, this is so important, that the first thing that I look at every single day is what are yields doing? And it really informs, my currency trades, and I will almost never go against yields. The tip number one is that, yields and the dollar move in the same direction. So if yields are down, I'm going to be looking for opportunities to sell dollars. When yields are up, I'm looking for opportunities to buy dollars. But of course, there'll be times where they move in different directions. We saw a bit of that this past week, where they move in opposite directions. And that happens. But in the long term, it will correct itself. And it's very hard for the dollar to fight against the trends of the bond market, because bond market is truly the biggest market in the world. Tip number two, the stock market decline is generally positive for the dollar. And that's because the dollar catches a safe haven bid. So, usually this is the ES. And you can see, so the S&P and dollar yen. And you can see that generally speaking, there is a very positive correlation between the overall equity market and dollar yen. So when I trade the yen pairs, I will always be watching what the US equity market is. And I know I'm going through these pretty quickly, but you have the videos and you can review what I'm saying. But this is something that we go through in our coaching sessions regularly, which we will be going through in our coaching sessions regularly, which is that the dollar and dollar yen definitely takes its cue from the stock market. Number three is maybe something new that you didn't know, which is that the US dollar data is very market moving and can lead to breakout moves for the dollar that actually lasts, quite a bit on Fridays. Some of you, some data you'll get a oomph and then it just stops moving. Some data, there's going to be continuation. And when it comes to US data, it can lead to very strong continuation moves in the dollar pairs, especially on Fridays. So when on Fridays, especially when we have non-farm payrolls, when you see a big move in the market, you think, oh, I see a big move in the market. I don't know if it's going to continue. Well, you can remember that Kathy is telling you from her experience that when it comes to Friday data, it almost always goes more than you anticipate. It almost always continues more and can be very, very, even though when it has a big candle, it can oftentimes go much more than you anticipate. And that could be very, very tradable. And then, dollar trends. This is also something that you may or may not understand, which is that dollar trends can be subjected to, or you may not have known before, but dollar trends can be subjected to reversals ahead of and into the London close. So we talk a lot about this. So, in terms of the London, in terms of trading, it's very important to know when to trade and when not to trade. And when it comes to trading, oftentimes right at the London close in Forex, we will get a reversal. So you may think we're making a new high or we're making a new low, but instead of that actually happening, what is more likely for it to happen is that you end up getting a reversal. And you see that, and this is something that we'll definitely be reviewing. You see that all of the time. You see at the London close that you see a reversal in whatever instrument, and it'll end. So if you're selling dollar yen in this case, right around the London close, which is basically 11 a.m. to 12 p.m. New York time, you're going to see a bottom. You're going to see a bottom and reverse the other way. And this happens all of the time. And this is something that I really, really, for those of you that are Forex traders, dive into with you in our coaching sessions. Now for the euro. Number one tip to understand about the euro is the most actively traded currency. Euro dollar is the most actively traded currency pair in the world. And it is oftentimes considered the anti-dollar. So when people are thinking, things are going terrible, we have to see, we don't want to be in US dollars. What do they go into? They go into euros. And euro, because it's so actively traded, will oftentimes, have very trending moves as a result. And so the fact that the euro is considered the anti-dollar and the only real competitor outside of gold for the dollar's reserve status, that, that is really the instrument that you want to be in whenever people question the validity, the safety of the US dollar. You want to be in euro as well as the British pound. The euro likes to track German US yield spreads. This is the German 10-year yield spread, and you will see that there is a positive correlation between the euro dollar and German US yield spreads, that they do move in the same direction as each other. And so they can oftentimes, move in the same direction. And if you're trading euro dollar, you should also be watching the German 10-year yield spread. Tip number 3, euro rallies when stocks are strong and falls when stocks are weak. And this is very, very important. Also, once again, something we will review all of the time in our coaching sessions, which is that euro is linked with stocks and it follows it nicely. So you will see that euro and stocks are moving in the same direction. And if stocks are doing well, I won't be selling euros. If stocks are doing well, I'll be looking for opportunities to buy euros. Conversely, if stocks are selling off, I'll be looking for opportunities to sell euros, because not only is the euro rally when stocks are strong or falls when stocks are weak, but it tends to trend really well because of ample liquidity. And when it has ample liquidity, it tends to move very, very well. And this is important because euro, when it goes, it can go quite a bit. And so very, very important in understanding that when the trends go in euro, they can trend quite a bit. And this is another really, really good tip for those of you that are trading euro, which is that euro dollar loves to target and break the round numbers in the New York session. I use this actually all the time in my trading, which is that when we are close to a round number, like 115 even, for example, and I've got a zip sell signal, it gives me a really strong confidence to take a good sized position in the euro dollar, because I know that it loves to target and break through the round numbers. And you see that here, euro, and this is only when it's the first visit, the first time. I need to clarify that. It's the first time that it's visiting the round numbers. The first time that it's visiting the round numbers, you will see that when that happens, that it will very quickly break through it, maybe by usually 6 or 7 pips, and then push back against it. And this happens very, very often. If we are within 15, 20 pips of, or 20 pips of the round number during the active market hours, that's really the key. When the market's active, it will almost always tag the round number. In fact, I have a trading strategy that is called running for the round numbers that is completely based upon this concept, because it happens so, so often. The British pound. For the British pound, what you need to pay attention to with the British pound is that, number one, the pound follows interest rate differentials closely, but has a weak correlation with the FTSE. So unlike the euro, which may, actually we didn't talk about that. We didn't like the dollar, which follows the U.S. stock market, for example. The pound does not correlate at all with the FTSE. Instead, it likes to follow interest rate directions quite closely. Pound is a monster. It has strong continuation moves, but it also has strong reversal moves, which is why it is so dangerous, in my opinion, to try to trade the British pound, because when it comes to trading the British pound, it can be a monster. It very much can go up and go down, and there's many reasons, plus the volatility in it. That's why I don't trade the British pound. But what I do love about British pound is that it really, if you like to trade it, it loves to tag the round numbers. It absolutely loves, just like the euro, if it gets close enough to a round number, it loves to break right through it. And break right through it multiple times. And this, once again, during the active market hours. Like an active market hours is defined by like 6 a.m. to 9 7:30 a.m. New York time and like 8 p.m. New York time to maybe like 10:30. I'm sure it's the case also with the London session, but I can tell you, unfortunately, I don't have much experience trading the London session because I don't actually, I'm not awake during the London session, but it is very, very powerful when it comes to that. And then another great tip is that pound usually peaks after news releases. So your big news releases looks like you have a huge flush higher in the pound, and it'll end up peaking and not continuing, which is another reason why I feel trading pound can be very, very dangerous. Number 5, there are oftentimes reversals after the London close. And you see it even more. Every single arrow that I have on this chart here is basically 11 to 12 p.m. New York time, which is the London close. And you can see first arrow, it peaks out, reverses. Second arrow, the previous big push move, it reverses. Third arrow, same thing. Fourth arrow, same thing. It is very consistent. So, as a trader of the British pound or the euro, in many ways, many of the major currency pairs, what does this mean to you? This means that you should, if you're long pound in the rally and it's rallying, you should close before the London close. Or, do not take any breakouts that happen. Like this last arrow on the right-hand side, you have a new high. Do not assume this new high is going to be continuation. Actually assume there's probably more likelihood that's going to be reversal than anything else. Or you can actually trade it. If you see the first red candle, you could potentially trade it for a reversal the other way. So there's a lot of different ways that you can interpret this information, hopefully to your advantage. Now, what about the Japanese yen? When it comes to the Japanese yen, number 1, the first trading tip for the Japanese yen is that it can sit dormant. It can be quiet for days and then move wildly. And you see that in this chart here. Dollar yen, it can there can be weeks or a week of consolidation. And then there could be huge breakout moves that have continuation. And that's really what I want to impress on you, which is that, that when it breaks out, it could truly, truly break out very, very significantly. And this is absolutely key, which is that don't fade the trend in dollar yen, because it can you see it these days. It can be monstrous. You see it in these charts, and oftentimes it goes beyond what the prior highs are before it finally finds some resistance. Yen also correlates really, really well with risk off trades, meaning that, when the stock markets are selling off, usually you'll have a sell-off in the yen pairs as well, unless there's a very specific factor that is moving the yen itself. Like, maybe Japan suddenly cut interest rates or hiked interest rates. They suddenly hiked interest rates and the US stock market is doing its own thing and it's going well. That is very key. That, is only when it's something that does not is specific to Japan will it do something different, but usually it'll just go the same way that everything else goes. Tip number 3, the yen is a funding currency. Japan has one of the lowest interest rates in the world. And a lot of the big money, and this is very important to understand, a lot of the big money from institutions, hedge funds, mutual funds, they're able to move their money around the world very, very easily. So they will oftentimes move their money from one part of the world to another and seek the highest interest rates. So Japan, if you imagine, is 0.5% interest rate. So if Japan is 0.5% interest rate, those big money people will feel like, okay, I'm going to borrow in Japanese yen and pay 0.5%. I'm going to deposit my money in the US, for example, and get 4%. And that way, that spread 4 minus half is 3.5%. And so I'm earning this 3.5%. So typically people do this when their risk appetite is strong. And so when the markets are going well, they're willing to take on greater risk and sell the Japanese yen and buy the dollar. But when markets are crashing, the yen rallies because that trade is being reversed. they are buying back the Japanese yen, and they're selling the US dollars, buying back the Japanese yen, and returning the money they borrowed to that bank. So that is why the yen is the number one funding currency, because it is so cheap. The Japanese yen is also vulnerable to trade headlines and to the absolute value of the yen. If it's too strong, too weak, it becomes very, very important. Because when it's too strong, too weak, because Japan is an export-dependent country, they will oftentimes come in and either say something or do something and express, their overall concern about where the currency is going as a result. Number 5, the Japanese yen tends to have a very, very strong correlation with the yield spread, as well as Japan's interest rates and the Nikkei. And it's very, very strong. This is the Japanese yen and the 10-year yield. You can see a very, very strong relationship between dollar yen and the 10-year yield, although it has broken down a little bit on this chart, which happens. There will be breakdowns, but over a very long term, the relationship is there. And it's even more so, even within that day that we have a breakdown, there was a relationship on a 1-hour chart. So if I'm trading the yen pairs, I will absolutely be watching what is going on the 1-hour chart, because you can see here the blue line, which is dollar yen, is blue line, which is the yield, is moving lower, and moving lower at a faster pace than dollar yen. And this is really, really important, because that suggests to me that dollar yen could continue to move lower. And that is something I think, I watch very, very closely. Number 6, Japan, unlike, very, very important, the British pound and the euro, which loves to test the round numbers. I'm going to add to this. The British pound, the euro, and the Canadian dollar love to run for the round numbers. The yen does not. The yen will struggle around the round numbers. It will get close to it, maybe 10 points, maybe 5 points, and then it will not continue. And this is one of those unique characteristics of the Japanese yen, which is that oftentimes it will not continue, and that it will just get close to it and fail. And you see that here. If you look really closely in the upper right hand corner, 158 is the big round number. It fails right there. This is and then the next chart, it struggles. This one continues, but oftentimes it will fail at the round number rather than break through the round number. Now, the Canadian dollar. The Canadian dollar, aside from my tip for you that it likes to run for the round numbers, and the 50. The Canadian dollar, the euro, the British pound, it loves to run for the round numbers, and it loves to run for the 50, which makes it's very, very tradable. Like, for those of you that see it close enough, it gets close enough to those numbers, it really, really likes to run for the round numbers. The Canadian dollar, it rarely moves in Europe and Asia, but it can have a catch-up move in North America. So this is also something that I trade quite often. So for example, if we have a big move in the Australian dollar, or we have a big move in the euro, and that happens during the Asia session, and I see the Canadian dollar do nothing, then there's a very good chance that I may actually get into the trade and look for it to continue in the New York session. So I'll carry that trade on overnight. So I will oftentimes, if there's a big move in the Australian dollar, Canadian dollar, dollar yen, whatever it is, and we don't see the same move in Europe, I will oftentimes, take the catch-up move in the Canadian dollar. And you kind of see this here. The blue line is the euro, and the candlesticks is dollar CAD. What I want you to see is I don't know if you can see my mouse, but down at the 7:30 a.m. hour on the right-hand side of the chart, you can see that, we see euro dollar rallying, and then we see it peaking and see it selling off. So it sells off, and dollar CAD moves with the lag, and it finally breaks out later on. So dollar CAD will oftentimes lag the euro dollar. Number two, the Canadian dollar often has a delayed reaction to CAD data. So oftentimes there's Canadian data and US data released at the same time. If they are released at the same time, what do you trade? Which one is more important? If they are released at the same time, usually the US data will be more important, and the markets will have a reaction to the Canadian data with a lag. And so if that's the case, then CAD yen is really the pair that you want to trade. Number three, the Canadian dollar doesn't always rise on good US data. Sometimes you'll see good US data and you think, okay, I'm going to buy dollar yen, I'm going to buy dollar CAD. Wrong, because oftentimes people see good US data as good for Canada as well. And so it may actually sometimes lead to a sell-off in dollar CAD. So when we have good US data, I don't always trade dollar CAD because oftentimes it will reverse the other way. Number four, the Canadian dollar has a strong correlation with oil prices because Canada is one of the world's largest producers of oil. And you see a very, very strong positive correlation between the Canadian dollar and oil prices here. And this is CAD dollar. So I flipped it. So when the oil prices drop, the Canadian dollar drops, which means dollar CAD is rallying. Number five, CAD is ultimately a risk on currency, which means that when stocks rise, the Canadian dollar also rise. So this is also the Canadian dollar flipped on its head, CAD dollar and the equity indices. And you can see there's oftentimes a little bit of a lag, but generally speaking, if stocks are falling, like the right-hand side of the chart, the Canadian dollar will fall as well. Now, the Australian dollar is sensitive to the market's risk appetite because Australia is a tiny, tiny economy. So given that Australia is a tiny, tiny economy, whatever is happening in Australia is oftentimes, much more impactful. Sorry, whatever's happening in the US is oftentimes much more impactful on the Australian economy than, for example, on the Canadian economy, even though it should still be the case for Canada. But overall, it is the Australian dollar is very, very sensitive to the market's overall risk appetite. And you can see the close relationship between the Australian dollar and the US equity indices, the S&P, very, very strong. So if I'm trading the Australian dollar, I'm not going to be fading whatever is happening in the stock market. I'm going to be looking for opportunities to go with the stock market. And, the Australian dollar has a very, very strong correlation with commodity prices, particularly copper prices. Australia is a huge producer of copper. And given that they're a huge producer of copper, it should be no surprise that there, you can see on a one-day chart, there's a very, very strong correlation to copper. So if you are trading in the Australian dollar, you should try to be looking at what copper is doing as well, because copper, can have a very, very, if copper is rallying, you don't want to be selling the Australian dollar. Tip number three, the Australian dollar may have meaningful reaction to Chinese data. So this is very important. Chinese data is released, the Chinese yuan is not actively traded. So oftentimes how people feel about the Chinese yuan will be reflected in the Australian dollar. This is very, very interesting and very, very tradable. So when it comes to Australian data, it likes to peak after the Australian data is released, do nothing, and then continue in Europe. This is very, very interesting, and for good reason. So this is the most recent Australian jobs report. It was very strong. Aussie spikes higher, and you're looking at this and you're thinking this is a really, really good Australian jobs report. They created jobs, better than we have seen in a very long time. I am going to go long Australian dollars because the number is so good. And so you're thinking, this is a great number. And look what happens. Then it pulls back. and you're like, oh, why is it not continuing? And then it goes up a little bit, but it really, if you look at this, it goes up another 10 points and then it drops. Psychologically, you're in this trade, you're like, why is it not moving? It's going against me. I'm just going to get out. I'm going to get out for a loss. And because I must be wrong. Maybe the market knows something I don't know. And, I've been sitting with this trade, this whole consolidation. I've been sitting with this trade for, it's like 7 p.m. all the way to like 3 a.m. or no, not 3 a.m., but 7 p.m. all the way up to like 1 a.m., and that's many, many hours. And you're like, forget it. I don't want to do this trade anymore. And that's the wrong mentality, because there's a couple of things that you should know about the Australian dollar that happens all of the time, which is that oftentimes after the data, you will have consolidation, you will have pullback, and that the market doesn't, because there's not many participants in Asia. It's not until the London traders come in, they go back and they look at the Australian data and they see, wow, that number was really great. Boom, we're going to buy it up. So we almost always see the second leg of the move higher in the Australian dollar after the Australian data at the London Open. So this is very, very tradable. I see this all of the time and again, it happens. It's, very, very powerful. Then the New Zealand dollar. The main trading tip I have for you is that it tracks the Australian dollar. I mean, this is no correlation as beautiful as this, right? I mean, this looks like it might as well be the same chart. And actually it is. I have to update this chart. I just realized it's Kiwi dollar and Kiwi dollar, but I'll update this chart and you'll see that it really is the same chart. And we can take a look at this on the live charts. Let me see if I can pull up my live chart here. Give me 1 second. But you'll see that, they basically move alongside each other. And, that's probably the most important correlation. The second one, as I'm pulling up my charts, is that Kiwi tends to have very, very strong trends. Kiwi, it's one of those very small countries and currency that is not as traded as much as the other currencies. And so as a result, it tends to trend a lot. So I'm going to pull up the Australian dollar and we're just going to pull this up and you'll see very, very tight correlation between these two instruments. And, it looks very, very similar to the other chart. Sometimes there's deviations, but it's very, very tight correlation. The most important thing, aside for when Australia produces economic data, is that there has a very strong, or New Zealand has unique economic data, or we have a Reserve Bank of New Zealand rate decision. More often than not, they will move in lockstep. So if you got a trade in Aussie, you got a trade in Kiwi, you pretty much have the same trade. The New Zealand dollar can also trend a lot. And once the trend goes, it can be very, very strong and very, very consistent. And that is something also that you should be aware of, that the New Zealand dollar loves to have strong trends. Tip number 3, it can have very narrow range and then it can break out. And then that breakout can be very durable. Like you see these narrow ranges, it breaks out, and it has narrow range trading, it breaks out and it can last. It can last for a while. So once a breakout happens in Kiwi dollar, it can last for quite a bit. Number 4, the New Zealand dollar is most sensitive to stock market moves. And, it is the quintessential, the key risk on, risk off currency. So when investors are willing to take on risk, usually the New Zealand dollar will be doing well. If stocks are selling off, the New Zealand dollar will oftentimes be very, very weak. And then last but not least, the Swiss franc. The Swiss franc, the only thing that you really need to know about the Swiss franc is that it is also a funding currency. It usually has a low interest rate. It's a funding currency. We don't really care too much about the economic data because it really doesn't move the Swiss franc that much. And so it's more or less seen as a risk on, risk off currency. It can have higher margin, tighter trading ranges, and it can be sensitive to intervention from the central bank as well. Now, we talked about how each of the major currencies are different. Sometimes the best trades are the ones where you take the US dollar out of the puzzle. and that you focus on trading the currency crosses. And in many ways, my most lucrative trades are the ones that do not involve the US dollar. So what are the currency crosses? Currency crosses are basically the pure non-dollar trade. Because in many ways, if you're long Aussie dollar, you're long Euro dollar, it's really in many ways just a short dollar trade. So sometimes you may have a real opinion. I oftentimes may have a real opinion about how the Australian dollar is doing. And that's when the crosses are the ones that you want to consider. But it's important to realize that the crosses all have different pip values. You can Google FX crosses point values. They all have different point values. So, 1 point in euro pound is very different from, it's worth like over $10. It's very different from 1 point in the Aussie CAD, which is maybe worth 3/4 of that or half of that. So that is also very, very important to be aware of. So that's pretty much what I want to share with you in terms of Forex trading tips. So we're now going to talk about, how to set up your trading day, what I want you to do to set up the trading days, which is number one, the first 10 minutes of the day is your most important 10 minutes of the day. And, this is what I do. Step number one, I get my coffee. I always have coffee. No matter how early it is, I cannot function without my coffee or just a sip of coffee. And then I'll check the news. This is what I want you to do. You don't have to have coffee, but I want you to check the news. I want you to go to CNBC.com. Just scan through the main headlines. You do not need to read the articles. Just look at the headlines and see what is everyone talking about. What is the big story of the day? What am I missing? The quick links will oftentimes tell you some of the key stories of the day. And of course, whatever the biggest article is. Check the data. What's on the calendar? What is going to help my trade? What is going to hurt my trade? Is it a day where we have U.S. retail sales and I should not be trading? Make sure you check the calendar. Then go in and read my good friend, Mark to Market. Read what he is doing. Not what he's doing, but what he's saying, what his views are. Because, I read him every single day. And I think reading him will make you a much more informed trader. And then, make sure again that, you've got nothing ahead of you that this is a duplicate slide. I should just delete the slide. Number 5, then after that, take a look at what the other markets are doing. How are equities doing? How are equity futures are doing? What are bonds doing? What are commodities doing? At that point, you can, kind of do your checklist that we gave you. Look at what's coming up next. Take a look at whether it's risk on, risk off. Is the dollar up or the dollar down? Only after doing all of that, which should not take you very long, once again, the good practice of it, should you start looking at setups in your trading strategy. I want you to go through all of those different steps before you actually start looking at the different setups that you have in your trade. Because I want you to be informed. I want you to be prepared. I want you to know whether or not today is a good day to trade or a bad day to trade. And then we get into trading. And then, of course, you want to make sure that you take your trades only at specific times of the day, because timing is really everything. And the market timing component of our course is probably one of the most important parts of our course. And you want to make sure you trade the right strategy at the right time of the day and avoid trading at the wrong times of the day. So last but certainly not least, here are the 9 things to never do when it comes to trading. Number 1, never add to a losing position. So important. All of these successful traders that I have worked with, I've traded with, only add to winning positions because only, there's a saying, only losers add to losers. So never add to a losing position, only add to winning positions. Never trade without a stop because, you never know how it could go wrong. You don't want to give up all your profits if you trade without a stop, because suddenly big news could come out or while you're sleeping, and you don't want to be exposed to that. Never go all in because, that's, you don't want to blow up all of your count on one trade. And it's hard because sometimes, you have a losing trade and you want to go all in. Never change your stops mid-trade unless it is to move your stop to lock in profits. Never move your stop, your original stop, to an even bigger loss. And the reason for that is because I like to say that we are all the most rational before we put on our trade, and we are the most irrational once our trade is live. So once your trade is live, you've got emotions, different things that are coming into play. And so that is probably the worst time to really be, trying to move things around. You just want to be in your trade and stick with your original setup. So you never want to change your stops mid-trade unless you're locking in profits. Never chase trades. Sometimes this move looks great. Much better to wait for a retrace to get into the setup. Never revenge trade. It's very tempting. You lost money. Why don't I double my position to try to make it all back? Do not do that. Never revenge trade. Don't over trade either. Don't, take too many positions. And if you have more than, 3 positions max, that's too much. Ideally, you only have 2 or 1, but if you have too many positions or you trade too much, that definitely is going to work against you. Never break your own rules. You got to start to be like a robot, and just see the setup, take the trade, don't break your rules. When I have losing weeks, or losing days, I can tell you that, more often than not, it probably involves me breaking one of my rules. One of the trades was a broken rule. And I'm human. It happens. Sometimes things look good, but, do your best to try to not break your rules. And then lastly, never trade because your friend said it was a good trade or on a friend's tip. You always want to trade your setup and stay true to your setup. So this is what I want you to do as homework this week. I want you to pick a strategy. I want you to take a trade, and I want you to document the risk and reward of that trade and your entry and exit. I want you to think about, where did you get in? Talk about how you trailed your stop. Talk about what you were looking for in terms of your target. Talk about what type of risk. I want you to I want you to spend some time and think about risk reward. Think about what worked for you, what you were tempted to do. And I want to hear from all of that as much as possible, because there's a lot that we can analyze in just not just the setup, because we've talked a lot about, the setup, but the exit part of the trade. I want to spend next week's assignment talking about the exit, not the entry. And so that's why when you pick any strategy that you're trading, take the trade and let's talk about the risk reward and the exit, and think about it and be more mindful of it. Send it to me, Kathy@bktraders.com. And regardless of whether or not you attend the live session, we'll kind of break it down and analyze your exit, because entries and exits are very, very important. And it's kind of like an analogy that I give, which is if you are on an airplane and you're on your flight from New York to California, from New York to London, would you rather your pilot who is flying the plane, would you rather the pilot get the takeoff right or the landing right? I want to hear your answer. And I'm pretty sure all of your answers will be he or she better get the takeoff and landing right, because if they do not, then there are some very serious problems. And the same sort of mentality should come with trading. You need to get the takeoff, which is the entry, and the landing, which is your exit right, to be a good trader. Everyone spends all their time on the takeoff and very little time on the landing, which is the exit. But they are both equally important. If you get one part of it wrong, the whole thing goes, kaput. So make sure. So this week is all about analyzing and breaking down the exit strategy. And that's what I want you to do your homework on. So bring your assignment on Friday, 10 a.m. Zoom class. Email it to Kathy@bktraders.com. And the subject should actually say lesson 8 assignment or whatever. Just use the word assignment or homework, and I will know that that's what it is. Or if you haven't taken your opportunity to book a 15-minute one-on-one with me, feel free to do so. The link will be in the email that is included for when I let you know that these slides are the posting is up. But really spend some time doing this. I really want you guys to deep dive into the exit this week. And I think you're going to find, that our conversation is very, very valuable on that. All right. Thank you so much for joining me. I hope you found this lesson valuable. And take your time to do this. Now we're going to open up the floor to questions and anything that you want to ask me. Let's see what kind of questions we have. I'm going to move the questions box down here. See a lot of comments here. So let's see. I'm going to go backwards and we're going to look at questions. Let's see. Is gold sentiment shifting? We talked about that already, I think. Ken says, I feel a bit like base hits are the best for standard strategy while learning to recognize the A-plus setups to swing harder and pounce when they are present. Yes, that's very, very true. Trying to swing for big wins all the time will result in large drawdowns that you probably won't survive. This is what makes this is what kills traders, and their strategies, which is that they have a large drawdown. That may be a part of the strategy and they give up, which happens a lot. Ali says, I missed big trades, but I learned through time that another opportunity is around the corner. It's hard to learn, but it comes through experience. Yes, Tao. I didn't talk about this today, but I always, like when I trade, oftentimes like in the beginning of the week, by Tuesday, I'll hit my 100 pip target. And I will still trade, but I will go into what I call profit preservation mode. So when I already hit my 100 pip target, I'll be much more conservative about my trades. I'll take smaller positions. I will grab my profits earlier because my job at the time is to lock in my profit and keep it. Because if you think about it the other way, let's imagine my $100 was my $5,000. Okay, it's basically modest. It's my $2,000 a week target. So let's imagine my 100 pip a week target was my $2,000 a week target. And I needed this $2,000, which is $8,000 a month, to pay my rent, to pay my car payments, things like that. So if I think of it like that, do I really want to risk losing that money? No. Yes, I want to try to make a little bit more because maybe the markets are going to give me more, but I'm going to do my best to protect that capital, to protect that profit, so that at worst, maybe I go from 2,000 to 1,800 this week, and maybe I'll make it back next week. But I don't want to give up that 2,000 and go back down to zero. Certainly not to zero, and definitely not even to like 1,000, because at that point I had $1,000 less to pay my bills. And I think if you start thinking like that, I think for me it was transformational when I started thinking about a weekly target. And some people are thinking this is the least interesting thing that Kathy's talking about. But in many ways, it is one of the most important things, that for my trading, that really turned things around. So as Tao said, first, protect principal. Second, consistent profit. And then also, my opinion, protect your profit. Then you can have the big win mentality. And I usually like that as a side account, not my main account. Thomas likes high accuracy, high probability because it resonates with me. Start small, then raise that goal. He says, I'm asking because obviously I start small, but how do I know when to raise my weekly goal? So, there's a couple, you gotta have a couple months of meeting the goal to do that. And there's a couple of ways to raise that goal, Thomas. One way is to actually raise it, to go for more, to have more positions. But I will be honest with you, most people, their mindset starts to shift. They get more nervous when they have, it's natural. They get more nervous when they have double the position, right? And they're looking for $1,000 instead of $500. So a better way to trick your mind is to take advantage of some of the copy trading. There's some services that allow you to have an account and then copies you, so you can just focus on your own account. Check the calendar. Yes, this is a review of what we were talking about. Ken says, I mentioned this before, but for my morning, I always listen to Vital Dawn podcast. Gives a great summary for the first in the day. Yes, that's very, very valuable. Is there any truth behind playing with a percentage of your profits, splurge on yourself, or you will blow out your account? Yeah, splurge on yourself is up to you. You could withdraw. You should definitely withdraw some of your profits or move it into your, yes, withdraw some of your profits, and then just separate it. But I just focus on making the target week to week. I think that's a good way to approach it. Yeah, I mean, yes, of course, you want to withdraw some of your money. Okay, so let's keep going. Careful not trading the holidays. Seasonal trading is, I think, less important, honestly. I don't think it matters as much. It's interesting to look at, and it's interesting to see it repeat. It's interesting to be aware of, but it's not as important as just being aware of the holidays. Thank you so much, Tao. And it really makes me feel good when a seasoned trader like you and like Ken, who have actually kind of know what you're doing and have experience, feel that this is valuable. That really, makes me feel good, because I know that the people who are new, like some of our friends here, they're going to find a lot of this stuff valuable and interesting. But the seasoned traders have been around the block for a while. When you feel that it's valuable, that's when it really makes me feel good that, I'm doing the right thing. What do you mean by using copy services? So this is very readily available in prop, where they allow you to copy the account. If you have one account, and then you can copy your strategy into the other ones. This is something that's very, very important that Boris is going to address in probably the last class, which is how to stack your accounts. And then raising risk goal 20% of the time after consistency. I mean, that's good. That's a good idea. I mean, I like that too. Having modest goals and raising it modestly, I think, is a good way to approach it. I mean, like I said, lots of people spend all their time talking about the strategy, the setup, but all these other things that comes from sitting in the seat and feeling it emotionally and being to adjust as a real trader emotionally, and how to turn this practically, is in many ways just as important as everything else that we've talked about. And then sometimes I feel awkward talking about it because it's very theoretical and it's very heady, and I don't have, I'm not showing you a strategy or a tip or something, but hopefully you hear from my voice how important I think these concepts are to trading, period, and to your success, period. That I really wanted to start off and end this class off with that, because not all of you trade Forex, not all of you are interested in it. Those of you who are, those tips are really good, but the mindset stuff is so important. So this is what I want you guys to do. Aside from the homework of really, I'm gonna show this again, because I really, and maybe more of you will submit your homework this week, but actually I have to share my screen. But what I really, really want you to do is, in your homework, is I want you to pick your strategy, take a trade, and then let's talk about the exit. Let's talk about what you were thinking, what you were planning, what your initial exit was, what your trailing stop exit was. Write notes to me, to yourself, about what you were thinking in terms of the exit, and let's break that down, because that's really, I think, everything's the key is. I use that word too much. That's really what I think is the key to what I want you to take away from all of this class, which is, let's really talk about the exit. Let's talk about what's going on, and go through everyone's exit strategies, and whether you're doing right, whether you're doing it wrong, and how you can do it better. And if you can't do it this week because it's Thanksgiving, no big deal. We've got more review sessions coming up. So do it the next week. The next 2 review sessions. For those of you that joined us late, I said that this is my last class with you. Boris is going to teach the next classes, but the next 2 classes, where he's going to teach you BFF, he's going to teach you swing trading strategy. His strategies are really good. I think you're going to enjoy it. But we're going to do our Friday review sessions. And then in January, we're going to have our coaching sessions, which will look very different from the ones we're having now. Bring all of that. Send me your assignments, and we can talk about it at any of the classes. So even if you're busy this Thanksgiving and you can't do it, actually, hold on. Okay, my friends, I am actually away on the 28th. So we are actually not going to do it on the 28th. We're going to do it on the 5th. And so we're going to have 3 other review sessions. So we're going to do it on the 5th, the 12th, and the 19th. I'm going to remind you over email. The 5th is when we're going to have our Friday class. We're not going to have it this Friday because the 27th is my birthday. My husband is treating me to a trip to Las Vegas. I do not gamble at the table, but as you may or may not know, I love to eat. And so there'll be a lot of eating in Las Vegas, but I'm going for the long weekend to Las Vegas, just Friday, Saturday, Sunday. So I will not be here on the 28th. Our homework session will be on the 5th. But Boris will be teaching the class on the 29th. So the 29th, Boris will be teaching a class. We're going to have our homework session on the 5th. And I will remind you in the email to let you know that this is happening. But thank you. No, my kids are not coming. It's just going to be myself and my husband. So it'll be an even better trip. But literally, we're going there for 2 nights, 3 days. That's what happens when you're a parent of young kids. It's the only thing that I can squeeze in as a splurge to myself without the kids. But thank you. So I wish you all a very happy Thanksgiving for those of you that celebrate it. I will see all of you we'll see each other on Monday for the live stream. Boris will see you on Saturday, the 29th, and then I will see you again on December 5th. And once again, I'm going to remind you all of this over email. Try to trade minimally next week. Monday, Tuesday, we should have great opportunities. Wednesday is going to start to get messy. Don't trade Thursday, Friday. And some markets will be open, some markets will be closed. Don't trade. But we'll talk about it on Monday. I will see you all on Monday for our Monday live stream. And have a great one, everyone, and have a good rest of the weekend. Thank you so much for all the wonderful birthday wishes. I really, really appreciate it.